Good evening, VV Nation, and welcome to the channel. My name is Glenn, Senior Stock Market Strategist for VectorVest. Glad to be here, glad to have you here. It's not a lot that I can talk about as far as finding new stocks to buy in the current market. You know that 80% of the stocks go down with the trend of the market. That means about 80% of the stocks in the market are going down. I don't really want to concentrate on the 20% that are going up. I'd rather you have your energy playing the market or giving the market or taking what the market gives you. Tonight, I'm going to talk about 3 of the biggest investing mistakes that a lot of people make. Whether you're using VectorVest or not, I'm going to really walk you through some of the biggest mistakes that investors make in the market to help to keep you on the right side of the market at all times. So what we're going to do, we're going to get right into the program. From the program, we're going to look at graphs. I'm going to start off with the VectorVest Composite. The VectorVest Composite looks at the movement of over 9,000 stocks. We feel that it's a better movement or a better representation of the broad market move. But not everybody here is a subscriber to the VectorVest software, so I'm going to take you through the other 3 indicators or indices as well. As I look at the VectorVest Composite, I can clearly see that it's in a downtrend. Keep in mind that markets go through cycles. Markets rise, markets top, markets fall, markets bottom. We're not close, we're getting close to a bottom, but not quite there yet. And believe you me, when we get there, between Ryan and I, we will keep you on top of that, all right? We will keep you on top of that. But look at the trend. Looking at whatever indice you're tracking, look at the trend of the indice. And even when the indice, in this case, the VectorVest Composite, is going sideways, you know, a lot of people jump up and go, yeah, the market's going to go up. Look at these levels of support and resistance. No matter what indicator you're looking at, you need to have trend lines and you need to have support and resistance to help you to understand what's truly going on in the market. So there's the VVC, there's the S&P 500, same thing here. Line at the top for resistance as it was moving sideways, downward channel. Currently, look at the trend line, down day to day. The market, the S&P is still going down. Let's go to the next one. There's the NASDAQ getting killed. Markets rise, markets top, markets fall, markets bottom. We're almost there, but not there yet. Again, when we get there, Ryan and I will let you know. The Dow, markets rise, markets top, markets fall, markets bottom. We're not there. Interesting, though, that the Dow is sitting at a level of support. Let's go see for the Dow, only 30 stocks though. Let's go see for the Dow if this level of support can hold. It's doing a really good job. The only one that's truly doing a good job as far as indices is finding a level of support. All right, now the next top or biggest thing you got to learn is knowing when to get in. I just did a video on that this weekend, but you know, looking at when the market bottoms, after it bottoms, what to look for before we start taking off again. If you hadn't watched that video, you need to go back and watch that video because everyone is asking, man, when is this market going to turn around? When is this market going to turn around? VectorVest, we have the answer for you. So if you haven't looked at the video about it, if we're nearing a bottom, you need to go watch that video. Another big thing, all right? So now, understanding what's going on in the market pulling back, the whole bottom thing, that's one other thing to look at, but that's not my main thing. Knowing what's going on in the market, knowing how to handle the stocks that you own, that's a big thing. When the market is trending down, a lot of people always ask me, so what should I do with this stock? What should I do with this stock? Every stock that you own needs to have a stop associated with it. You don't want to have a mental stop because mentally we'll go through it and we'll just blow through that stop. We won't take the stop. Have a hard stop in place, whether it's a trailing stop, which trails from the highest point the stock is hitting since you got it until it hits, like a 7% or a 10% trailing stop. That allows the runners to run, but get you out and mitigate losses or take profits at the right time. Average true range. I'm probably going to do a video soon on the myriad of different stops to use based upon how you invest in the market. If you'd like to see a video like that, type the word stops in the chat. If you're interested in seeing all of the different types of stops that you can use, no matter how you invest in the market, type the word stops. That could be a really good video, depending on how you invest in the market. So number 2 is always have stops in place. And, on a bare minimum on that topic, think of it from this perspective. If you don't want to put a stop in, always never lose more than half of what you've made on a stock. So if I'm up 20%, I should close out no less than a 10% loss. If I'm up 30%, I should close out no less than a 15% loss from where I was. Folks, never lose more than half of what you've made. Probably the easiest stop that I can tell you about right there. All right. Now, with that being said, what's number 3? Number 3 is knowing the type of investor you are so that when the market does turn around, you'll know the types of stocks to buy. Let's go to the Unisearch tool. From the Unisearch tool, we've got 4 different types of investors. You've got the aggressive investor, the prudent investor, the conservative investor, longer term, and then you've got the speculative investor who's only looking for the home runs. There's 4 types of investors in the market. Knowing the type of investor you are is very important. How do you do that? You put your stocks into a watch list, okay? Put all the stocks you own into a watch list. If RV and RS are both above 1, you're a prudent investor. If RV is below 1, but RS is above 1, you're a conservative investor. If RV is above 1 and RS is below 1, you're an aggressive investor. And if both RV and RS are both below 1, you're a speculative investor. So that's where VectorVest comes in and plays an important role in not only all the analysis that it does, but it also pays attention to the type of investor you are. And once you know that, go to the Unisearch tool. We have searches for aggressive. There we go. We've got searches for conservative. There we go. If you're a longer term, sort of like a swing trader, we have searches for prudent, the best of both worlds, stocks that are going up in price and that are safe. And then if you're just really looking to try to hit a home run, then we have searches speculative right there. Those are the people just trying to hit the home runs. All right. So the 3 things that, the 3 biggest mistakes. Not understanding what's truly going on in the market. You've got to know, no matter what indice you're looking at, preferably the VVC, not having stops in place, that's the major killer of portfolios. And then knowing the type of investor you are so that you can always invest in the types of stocks that fit your investment style. Folks, that's it. That's the best that I can do for you today because I think it's important. You got to know these things. These are the 3 biggest mistakes that are hurting a lot of people's portfolios. Thank you for joining me today. If you're brand new to the channel and you like this content that you saw, consider hitting the subscribe button, hitting the bell icon so that you'll get alerted to when all the videos come out. For those of you who are subscribers to the channel and like the content, hit the like button. Let me know you like the video. Put a comment in there about what you think as well, what else you could feel is a bigger problem that people are having while investing. With that being said, folks, have a great evening. This video is over. See ya.